Back, let's address the big story that came Friday evening. It was Finance Minister Nirmala Sitharaman unveiling a slew of measures to stimulate the economy. Let me quickly take you through the key decisions. The first one, the higher surcharge on foreign portfolio investors. That's gone. The government stands to lose just 1,400 crore rupees due to this rollback. Number two, the government will release the entire 70,000 crore rupees to capitalize public sector banks at one go sometime soon. From banks to automobiles, in a bid to boost Motown sentiment, the Finance Minister has also said that the higher vehicle registration fees that was announced will be postponed till June next year. And in order to ease the liquidity crunch, especially from the MSME sector, the government has decided to speed up GST refund process. All pending GST refunds, they'll be paid within 30 days.
This is only a start. I do not want worries to remain. We are continuously consulting with people. We are taking their inputs and responding to them. And therefore, this is only a start. Today, we've come with a set of our responses. Sooner the next week again, I do not want to give a date even now, but next week again, we shall be coming with one more set of announcements. Relief from enhanced surcharge on long-term and short-term capital gains. In order to encourage investment in the capital market, it has been decided to withdraw the enhanced surcharge levied by the Finance No. 2 Act of 2019, the recent budget time. All pending GST refunds due to MSMEs, till now that is, shall be paid within 30 days. Everything that is pending since I don't know how many years, from the time of introduction, let us say, of the GST, from then till today, whoever has got a pending refund problem, it will be sorted out within 30 days from today. The government has worked very clearly to clear it all within 30 days. And from now, for future GST refunds, every refund for future GST refund matters will be sorted out within 60 days after it arises. Additional credit expansion through public sector banks. This is something which we did announce during the budget session. Upfront, we are releasing the 70,000 crores. Upfront, we are releasing the 70,000 crores and additional lending and liquidity to the tune of 5 lakh crores can be made available by providing this upfront capital for the PSBs. We are very clear that this will benefit all the corporates, retail borrowers, MSMEs and small traders as well.
Well, as you just heard, the government will release 70,000 crore rupees to capitalize PSU banks at one go. Abhishek Kothari is with us to tell us what will it mean for this sector. Abhishek, tell us, they're talking about sending this out very, very quickly. In prior years, how long does this take to release? In the first half of the year, or is it towards the second half?
Well, this announcement of upfronting of 70,000 crore is perhaps for the first time that, government will be given its budgeted capitalization in the first half of any fiscal. Generally, typically, they have given it at the fag end of the fiscal. Taking a cue from where the capitalization of PSU banks are, it looks like IDBI Bank, Central Bank, Indian Overseas Bank, PNB, UCO Bank and Canara Bank, who have, the tier 1 ratio less than 9%, could be the big beneficiaries. Analysts also say that, NBFCs could be a beneficiary from this capital announcement, given the fact that, liquidity will flow to NBFCs and the cost of funds while they borrow from the banks will actually reduce. On the loser side, you might have private banks and HFC face, pressure on the yields front as, PSU banks will be upfront in transmitting the interest rate on a declining rate scenario. Back to you.
All right, thanks a lot for that. That's about the PSU banks. But the Finance Minister also quelled fears over the BS4 vehicles, said they won't go off the roads after BS6 transition next year, and has deferred higher registration charge on vehicles till June next year. Listen in.
The revision of one-time registration fee, there was really a lot of heartburn, understandably, On the registration fee being asked upfront and so on, we have deferred it till June 2020. There is no need on that to have any worry. The next is, importantly, because inventories are stocking up and piling up in car manufacturing companies. Today, you get a 15% depreciation on them. An additional 15% depreciation on all vehicles, not only this, not only that, on all vehicles, to increase it to 30% acquired during the period from now till March 2020.
Well, Sonia joins us now to tell us how these announcements will impact the auto sector and what brokerages are saying as well. Sonia, over to you.
Well, thanks a lot for that. As you can see, most of the auto stocks are trading in the red. Now, that's because the finance minister's statements are positive, but this doesn't mean there will be a boost in demand in the medium term. In fact, I spoke to a lot of industry experts. They say that a couple of things are disappointing. One, there was no clarity on the scrappage policy, and that was actually the need of the hour for the commercial vehicle sector, so that's a negative. Two, there's nothing in the policy for two-wheeler makers, and the big slump is what we've seen in the two-wheeler space, so that is a big disappointment as well. Also, on the 15% depreciation, you must remember that 70% of the industry consists of small fleet owners, and for small fleet owners, their business is under so much pressure that even if they are incentivized to buy, to replace their old vehicle, for the lack of business itself, they may not go in for a new vehicle despite this additional 15% depreciation. Apart from that, there are of course positive measures like reversing of or deferring of that higher registration fee. However, most brokerages believe that all of this will not lead to higher demand in the near term. In fact, Macquarie says that the market is largely disappointed because a large fiscal stimulus was expected. Two-wheelers could be particularly disappointed because of the lack of a major stimulus. Jefferies says the measures by themselves are unlikely to materially boost demand. The government, yes, has made its first move, and the government has indicated that more measures to come is a sentiment positive. So, one more thing is the government has said that they've removed the ban on purchasing of new vehicles by government companies, but given the fiscal constraints, it's unlikely that government companies will make higher purchases in any case. So, statements positive, but no major boost to demand.
All right, Sonia, thanks a lot for that, which is what explains why the auto index has now moved into the red, currently at the lower end of today's trading range. But let's slip into a short break. Come back, we talk about Jet Airways. The Committee of Creditors will hold their third meeting today. More details when we return.